Good morning, lower sixth. So we have just finished our sources of finance, internal and external sources of finance. We have introduced our business objectives and our forms of business, and we've talked extensively about those different types of business and business objectives, and we've linked all of that into obviously our organisational objectives. And we've learnt with those sources of finance to use different opposing sources of finance, maybe an internal versus an external, as an example, maybe two externals, as our counter arguments. So we talked briefly about JCB in class the other day, and lo and behold, there is an article in the press today talking about how JCB profits are increasing even though there's a global market slowdown. Now remember what JCB are very good at. They're very good at diggers, construction stuff. So whenever there's construction going on, we would hope that this company is going to do well. They are not the only company that makes this type of equipment, but they're pretty good at it. Now, the reason we did this example in class was because this is an example of a very big limited company that has chosen not to go to a PLC. So it is a big company who have chosen not to go to PLC. Part of that might be because they want to choose who they're going to sell their shares to. It doesn't mean that they can't raise capital, it just means that they can't raise it on the stock market. Maybe that means they get more or less for their shares, depending if we were comparing it to the stock market, but we don't know. But we can't just say they will get more money on the stock market, because they might not, because it's all about supply and demand, and we know that from the supply and demand diagram we did in class the other day. Thank you to Noah for demonstrating. Now, here's an article that I've adapted for you, and I've highlighted some key things here with sources of finance, forms of business, and some of those things linked into obviously business objectives. Now, before I ask you to pause the video and to read the case study, we're going to talk about the question that we're going to explore later in this video. So this is a standard 8 marker. We will find these in paper 3. In paper 1 and paper 2, we start off with 2 4 markers. Now, this is the standard P paragraph with balance that we would write, and we can see that we've got 2 likely benefits here. Okay, so we are going to start off with one benefit is, another benefit is, but each of those needs a P point and a however. Okay, so it's very important that we have that however, because if we don't, we're not going to have a balanced answer and we're going to have our marks capped. Now, and I'll go through the marking grid a little bit later. It's really important you take that on board, because if you just answer this question as it's written, you're going to get half marks probably, okay, for a perfectly good answer that just isn't balanced. So that's sort of our structure, the likely benefits of a private limited company. So we're going to need to demonstrate an understanding of a private limited company, that's our K, to help me understand what we're going to start our answer off with, a good definition. And also we need to understand the hook here, because hooks are always in 2 parts, aren't they? So we've got likely benefits, and then we've got 2 shareholders. Okay, so we're going to need to demonstrate an understanding of what shareholders are, but remember the likely benefits are not so much to JCB Limited, it's to the shareholders of JCB Limited. Top tip, kids, read the question and identify the hook. So I'm going to write hook next to this, so I can remember, and then when I start writing my answer, I'm going to start with a good definition of private limited company. Now, it's really important at this stage that we identify the aims of the company in some ways, or in this case, the aims of the shareholder. Now, we also have to go careful with this type of question, because you will know your forms of business inside and out. You would have written probably every single past paper question going, and more before you go anywhere near your upper 6th exams. Go careful of being lazy, because the instant thing with forms of business is we think about limited and unlimited liability, and if you start comparing this to the language we might see from sole traders, it will be a silly answer. Okay, now this company made a pre-tax profit of £806 million last year. If you're going to compare this answer to unlimited liability, and that's the main benefit that you're going to write, we've got some problems with your answers. Now, it's going to be true to an extent, but it's not very good, is it? It will come across as superficial, recall, and there might be other benefits here. Okay, so don't just focus on the stock answers that you memorize from your textbook. Actually read about the company. And even though this is a revision case study, I've made sure that we've got limited liability in there for you. That's fine, but don't just say because the shareholders are going to be protected, even though that could be a potential answer. But go careful. Now, this is even more important when you answer questions like, JCB are considering floating on the stock market. And this is where this point of unlimited liability is a real problem. If this limited company is considering going PLC, both of those forms of business have limited liability. So you should not and cannot say one benefit of being limited is limited liability and one of PLC is limited liability. It's the same one. It's no comparison whatsoever. You will get marked down. With this question, you might get away with it a little bit, but we shall see. Pause the video, go in. Remember, you need evidence for each of your P paragraphs, and your howevers need to be in context. If your howevers aren't in context, they don't count. So pause the video, read the case study, and at least plan an answer. Did you pause the video? Maybe not. So let's go through some theory here. So we've got our potential benefits and drawbacks of being a limited company. Okay, so yes, there's limited liability. Okay, I'm not saying that it's not a benefit, it definitely is. And from a shareholder perspective, if something went wrong, hopefully it wouldn't, but if it went wrong, at least the shareholders are protected. Okay, however, they're going to lose the value of their shares, aren't they? So it's not that they're not going to be impacted by this. It just means that the investment in the company is separate from personal assets. We know that. That's fine. Now, this is something where students get excited. Students get excited over exciting, sexy topics like bankruptcy and losing control over companies. Unless the case study says that JCB, for example, might be selling 51% of their shares on the stock market, why would you talk about control? If you wanted to talk about that major shareholders could have influence, even with 5 or 6%, they're going to have influence, aren't they? Then that's a better argument instead of you defaulting. You also need to understand the motives of shareholders. Why would they invest in JCB? Well, it's a good business. It's making profit. We know that from the case study. Over £800 million worth of profit in a year. Do you honestly think that a shareholder is going to come in and say, right guys, we're now going to start selling cheeseburgers? Well, clearly not. So you also need to understand that the board that run the company, they might be influenced by shareholders, but they're not just going to say, okay, you can manage the company. The board have been recruited for a reason, even though significant shareholders can put pressure on the board. Okay, so don't just go in there with the nuclear option of someone might take over the company. However, because the shares are in a small hands of the small group, the initial family, for example, that owns the company, plus some significant investors, and there will be probably some pension funds and some wealthy individuals that have shares in the company, it will prevent this. Now, I'm not saying that hostile takeovers don't happen. Look at Cadbury's and Kraft. That took at least a decade for Kraft to get enough shares to take over the company, and look what they've done with it since. But we are not going to leap to that. Hostile takeovers do not have a place in this essay, but it's worth talking about them in passing so I can have this rant. Now, less regulatory scrutiny compared to PLCs. I can download most PLCs accounts, and actually if there's less regulations, then it costs less money to run the company. Superdry was in the press over the summer saying that they were considering delisting from the stock market, and one of their primary reasons was to spend less money on regulation because they're losing money, of course. So this could be an argument in favour of staying as a limited company. Yes, we could focus more on long-term growth, but the reason I'm saying this is not that PLCs don't, by the way, because they do. But it might be that the current shareholders are very happy to wait for long-term profits. And if they need to get in loads and loads of investment for hydrogen combustion engines, rather than taking short-term profits through dividend payments, then maybe this would be an argument. Now, remember what we've talked about in class. Amazon didn't make any money for 15 years. Their share price was still really, really high. And that's because the shareholders from the stock market, the PLC equivalent of a company, they believed in the future. So let's not generalize across all companies because it's not true. And if it's generalized, it's an assertion, and that horrible word will appear very low in the marking grid, and we don't want you to get low marks. Do not generalize. Now, flexibilities with dividend payments is the same sort of point as the previous one. And then we go on to our drawbacks, and our drawbacks would be considering a different form of business, if that's what the question was. So we've compared here to PLC, and obviously if there's huge amounts of demand for these shares, remember that diagram we did in class the other day, if there's a limited amount of shares and excess demand, it pushes the price up. Maybe JCB would get more money per share if they were on the stock market. Maybe they won't. Okay, we don't know because they're not on the stock market, but it is a potential argument if you were doing a comparison to a question like assess the likely reasons why JCB are staying as a limited company. Okay, because staying is going to a PLC as the alternative. It is not becoming a sole trader. Yeah, ridiculous concept, but I can guarantee you if that type of question was asked this summer, some people would consider unlimited liability in their answers, and it would just be wrong. So liquidity of shares, well, the argument in your textbook is if you're a private limited company, you might find it difficult to find shareholders. I think if they're making nearly £1 billion a year profits, I think there'll be lots of institutional investors that will want to work with them. But it's not as easy as it just being on the stock market. Maybe there's an ease of access to the liquidity of shares. Maybe it's a bit harder, a bit longer of a process to sell these things. Now, if the question was considering PLC, we would obviously have to talk about the advantages and disadvantages of being a PLC. Now, this is really just the counter of what we've already talked about. So I'll whiz through these. Access to capital. Increased visibility in lots of ways is very important. Now, JCB is a famous and well-known brand, so I would argue that this is probably not a valid point for JCB, just being on the stock market. However, for more fledgling companies that want to go on the stock market, maybe the marketing and the brand awareness raising that accompanies stock market flotation might help the brand. I don't think this is a solid argument for JCB because most people have heard of them. Now, share liquidity we've talked about, and we've got that lovely loss of control. Well, maybe the Bamford family would lose control of their baby, but only if they give away a controlling interest. And that's the bit that most essays forget to mention, because it's exciting and sexy to say you might lose control of your company. Okay, look at EasyJet. That's been a PLC for ages. The founder of that hasn't lost control. It's because he still owns more than 51% of the shares. Pressure on short-term profits, counter-argument from before, not always true. Yeah, Spotify still hasn't made any money. Yeah, they're banking on the future. And increased regulation. We talked about it in the other way to do with limited. Okay, make sure you mix and match your pros and cons. Now, here's the case study again, and here is our essay. So as a quick reminder, 2 likely benefits, yeah, and I'm going to put plus however in there, of being a private limited company, LTD, and obviously this is my K, my knowledge, and the benefit is to shareholders, which is my hook. This will be in context with JCB and not some random company. And just because you keep repeating the letters JCB does not mean it's in context. So I'm hoping to see something about diggers, construction companies, or something to do with these wonderful profits that I've already mentioned in here. There's loads of information here. This is way bigger than a case study in an exam, but remember, we're sort of revising aspects of a number of units here, which is quite a helpful thing to do at this stage. So let's have a look at an answer, and it might not be perfect. So, private limited company means that the company is privately owned and shares are not not sold publicly with limited liability. Well, if we were marking this in class, we'd write a K next to that. It's a good definition. And there's nothing wrong with limited liability being in there. You can sort of spew this sort of definition out easily, and it sort of gives you some of your arguments possibly. So not sold publicly, and we've got limited liability in there. So a good definition is not just the foundation of a good answer, but also sometimes it gives you your arguments. So one benefit of being a private limited company is that shareholders benefit from limited liability. This is important. Now, I encourage you to underline your connectives in class and put quotation marks around your evidence. So this is important because shareholders' personal assets are protected. Well, sort of a repeat, really, of that first sentence, but never mind, leading to reduced personal financial risk. Remember, the hook in the question is to shareholders, yeah? So this is a valid argument. For JCB, this results in shareholders only risking capital they invested in the company, as, let's make sure this is in context, JCB remained debt-free after accounting for cash. Okay, so actually, there's less risk there anyway. This is important because, yeah, we've got a resulting in there. Shareholders are less likely to suffer large personal financial losses, leading to more confidence in long-term investments. So actually, even though it mentions risk about 3 times, it's not the best written essay anyone's ever written. What we've also got on here as well is more about the benefits to shareholders, confidence in long-term investments. So I'm going to put an and next to that. We need at least 3 chains of argument, and we've got more than 3 already. We haven't even looked at the however yet. Okay. Now 8 markers are quick, 1.2 minutes per mark. You don't want to be spending more than 10 minutes on this, really, and that includes reading the case study. Remember, your case study wouldn't be as massive as this one in the real exam. Then you'll see I've left a space. I'm trying to condition you to make sure you remember your counter-arguments and also signposting language. One benefit, however, is a nice bit of language to remind you to write counter-arguments, which must be in context. Limited liability can restrict access to large external capital, as JCB cannot raise funds by selling shares publicly, which may limit growth of opportunities. Now, this is a great example of something that sounds relatively technical, but it's abstract. JCB is not context because it is mentioned in the question. So that's not application. Raising funds, shares publicly, it's a bit of a repeat. And and it's abstract. I could change the name of JCB to McDonald's, it would still make sense, and sort of not impressed with this, even though it is sort of a counter argument. Problem is, up here we've got confidence in long-term investments and we've got limited liability. However, limited liability can restrict access to larger. How can it restrict access? Yeah, so maybe the limited company compared to PLC could limit access to large external capital, but how can that? So actually, not only is it abstract, it's potentially wrong. Another benefit, you'll notice we've got signposting language there, so the examiner and you know that you're going to remember to include two likely benefits. Is the ability to maintain control over ownership. This is important because shares in privately limited companies are not publicly traded, bit of a repeat from above, because leading to the founding family, that's a bit of application, isn't it? That's quite nice. Retain decision-making power. For example, JCB is chaired by Lord Bamford, son of the founder. A bit more application and some nice quotation marks, which results in the Bamford family being able to steer the company's strategy without external stakeholder pressure. Bit of a generalisation there. I'm sure some of those big shareholders have got a little bit of influence, even though it's true. This is important because it allows JCB to focus on long-term growth rather than short-term profits, leading to consistent innovation, such as development of hydrogen combustion engines. Now, that sounds lovely. So we look through this, and ownership, this is because shares limited, retained. Where's the impact on the shareholders? This looks like impact on JCB. Now, the Bamford family are definitely shareholders. So being a nice, generous sort of chap, if I was an examiner and not a Dalmatian, I might give them the benefit of the doubt, because the hook is definitely impact on shareholders. We've said that they've got control, and it helps the Bamford family to focus on long-term consistent innovation. I'm going to let this one fly, but go very careful. To improve that, we could have said a major shareholder after Lord Bamford. Okay, so could have been a bit better, but we'll see. However, nice signposting language. Remaining private may limit the company's ability to raise large amounts of finance. It might be a good point, but again, this is very much abstract. Yeah, I'm going to write abstract in there because I'm finding it mildly offensive. And it could be about McDonald's again. And let's face it, we've talked about this enough. So I'm not going to give you the marks for it because, let's face it, you've used the same counter argument. And is that an impact on the shareholder, which is the hook? So this is definitely an impact on JCB, not so much on the shareholder. Okay, we could have easily may limit growth opportunities, and then a chain of argument to impact on dividends or shareholders in the future. We could have done exactly the same down here, by the way, which is why I encourage you not only to identify the hook in the question, but when you've finished a chain of argument, double check that it does link back to the hook. And if it doesn't, just write a tiny bit more, as long as you've still got time. Okay? So, moving on to our lovely standards, we can see that this is probably not in context and also doesn't directly answer the question because it doesn't link to the shareholders of JCB, not directly. This, I think this is all right. We've got nice chains of argument, lovely context, couple of bits there. Might be a little bit long. There's no marks linked to length of answer, unless you run out of time at the end of the exam paper. So as long as you can write this in about 8 minutes and get the information out of the text within 2, then I've got no problem with the length of this. Some of you will overwrite these for prep, but that's normal at the beginning of the lower sixth and you will be fine. This one here is indirectly probably linked to shareholders, but again, it's not directly. So I'm going to put a sort of a question mark. My pen's a bit dodgy. And this one up here is, I think, okay. Okay, because it's leading to confidence in long-term investment is definitely linked to shareholders. Now, is it accurate and thorough knowledge and understanding supported throughout? Well, I think so. Yeah, I think it's okay. The knowledge is there. Relevant and effective use of business behaviour in context. Now, that I've got a question mark over because my however points are not contextualised. And actually, this one here, I'm not actually sure that it links, well, it doesn't link to the shareholders. Now, I'm going to put a cross through that because it's not context throughout, but it is supported throughout by business behaviour, sort of. It's all right, it's not great. Okay, are there logical chains of reasoning? Well, is there a minimum of 3? And more importantly, is it in context? And does the end of the chain of argument come back to the hook in the question? Well, that one does, and the other 2 don't. Okay, assessment is balanced. Well, there is howevers in there, but this one is not in context at all with shareholders. Okay, I would question if that one is. So is the assessment balanced and well contextualised? Well, not throughout. And does it use the evidence? Does it show an awareness of competing arguments? Well, there's balance there, but not brilliant. I would question if it's balanced. It is balanced a bit, but it's not in context. For you to get all these marks, you need contextualisation throughout. Okay, now, is it unbalanced? Well, it might be a bit because these points are not there. Unlikely to show the significance of competing arguments. Well, realistically, these howevers are abstract. I think we're probably here. I would say we're a bit there, and some of these things are a bit incomplete, aren't they? This is probably 5 or 6 marks. You might give it 4. I wouldn't argue too much with you. I'm going to be generous because it's the beginning of the lower sixth. I'll give that 5 out of 8, and you can decide if you disagree or not. Make sure your counter arguments are contextualised. Make sure it's directly linked to the hook and not just the advantages and disadvantages of the business. If any of you want to retype this essay and improve it, send it over to me. If it gets full marks, I'll give you a couple of cheeky merits. Hopefully you found that useful. Have a wonderful day. I will see you in class tomorrow.